Hey everyone, welcome to Talk Tickers. We've got a really interesting one for you today, RF Industries, or RFIL. This stock just went on an absolute tear after dropping a huge earnings surprise. And let me tell you, this wasn't just a one-off good quarter. Nope. This feels like the big payoff for a turnaround story that's been years in the making. So we're going to dig in, break down exactly how they pulled it off, and then talk about what might be next for the stock.
All right, so here's the game plan. We'll kick things off with the big numbers so you can see just how massive this beat was. Then we'll get into the story behind it all, the strategy shift that really lit the fuse. After that, we'll cover what management is saying about the future, check out the market's reaction, and finally, we'll wrap up with our own take, the next call. Okay, let's jump right into the results. Sometimes the numbers just speak for themselves, and boy, did they ever this quarter. It looks like this company is firing on all cylinders.
So, the number that had everybody's jaw on the floor, a 150% beat. Yeah, you heard that right. A plus 150% surprise on their non-GAAP EPS. This is the kind of explosive outperformance that, really gets a stock moving.
So, let's put that into perspective. The analysts on Wall Street, they were penciling in about 8 cents a share. RFIL comes in and drops 20 cents on the table. That's not just a little beat. That's more than double what anyone was expecting. No wonder the stock just took off like a rocket.
And it wasn't just the earnings either. The whole report was solid. Revenue was up a strong 23%, hitting almost $23 million. But honestly, the really juicy part of the story for me is the profitability. Their gross margin jumped by a whole 600 basis points, that's 6 full percentage points, all the way up to 37%. And their adjusted EBITDA margin, a really healthy 11.5%. See, this tells you it's not just about growing sales at any cost. This is smart, profitable growth.
So, the big question is, how did they do it? Was this just a lucky break? Absolutely not. This quarter was no fluke. This was the moment where a deliberate, long-term strategy shift finally, and I mean finally, started paying off. Big time.
The CEO, Rob Dawson, basically laid it all out. He said the plan was to stop being just a product seller and to become a technology solutions provider. And that right there, that little shift in language, that is the absolute key to understanding everything that's happening with this company right now.
And look, you can see that strategy in action right here in the numbers. They've totally changed their business mix. It used to be that telecom was like 70% of their sales. Now, it's a much healthier 50-50 split. The other half is coming from places like aerospace and transportation, which, by the way, tend to have much better margins.
So yeah, the new model is clearly working. When you combine that better mix of business with just more sales in general, you get this beautiful thing called operating leverage. All that really means is that every new dollar of sales they bring in is more profitable than the last. Their profits are basically growing way faster than their sales. It's exactly what you want to see.
And get this, they're not just hitting their own targets, they're absolutely smashing them. They were aiming for gross margins above 30%, they hit 37%. They wanted adjusted EBITDA over 10%, they delivered 11.5%. This tells us that this isn't just a one-quarter blip. This is what the new, much more profitable and sustainable business model looks like.
All right, so that's the story of the quarter. But what about what's next? Let's talk about the guidance, because management's tone was pretty interesting. They sounded really confident for sure, but they were also pretty careful to keep everyone's short-term expectations in check. A nice mix of optimism and realism. Okay, so for the full year, they're basically saying, expect more sales growth. They're also committing to keeping that adjusted EBITDA margin above that 10% line, which is great to hear. But, and this is important, they're flagging Q1 as a seasonal low point, so expect a bit of a dip before things ramp back up. And oh yeah, they're still laser-focused on paying down debt.
Just a quick note on that Q1 seasonality thing, in case you're not familiar. For a company like RFIL, their first quarter runs from November to January. Right through the holidays, when a lot of their customers are resetting their budgets for the new year. It's just naturally their slowest time. So management is basically giving everyone a heads up. Hey, don't freak out if Q1 looks a little soft, it's normal, and we expect to pick up steam after that.
Okay, now this is something I'm really keeping an eye on. They mentioned an early-stage project, something about thermal cooling systems for edge computing. Now that sounds interesting. It's exactly the kind of high-tech, high-value solution that fits their new strategy perfectly. It's early days, but that could be a really big deal for them down the line.
Okay, so amazing quarter, solid guidance. Let's zoom out a bit and put this all into context for investors. How has the stock actually been doing?
Well, the market didn't waste any time. The reaction was swift and it was powerful. The day after they announced, the stock shot up more than 22%, and on big volume too. That's not just a little pop.
That's the market waking up and saying, whoa, we need to totally rethink what this company is worth.
And this wasn't just a flash in the pan. If you zoom out and look at the whole past year, RFIL has just been crushing its benchmark, the Russell 2000. I mean, the stock is up over 116%. That tells you that smart money has been catching on to this turnaround story for a little while now. This quarter just put a big exclamation point on it.
Which brings us to our final section, the next call. After a run like this, what's next? Is there more upside? Let's break down the thesis from here.
So this is the million-dollar question, right? You see a stock run up over 100% and then pop another 20, you have to ask, is all the good news already baked in, or is this just the beginning of the next chapter? Personally, I think if they keep executing, there's a lot more to this story.
So, here are the 3 things you really need to watch for. Think of it as a checklist. Number 1, they have to deliver on that acceleration they promised after the slow Q1. Number 2, they're sitting on a $15.5 million backlog. They need to turn that into actual revenue. And number 3, that cool new edge cooling project, we need to see some real, tangible progress there. Show us the money.
So when you weigh the risk versus the reward, here's how it looks. The big risk, that Q1 slowdown is deeper than they think, or, the broader economy gets shaky and slows down new orders. But the reward, well, it's pretty compelling. If these new higher margins are here to stay, and if those new markets like aerospace start growing even faster than we think, there could be some serious upside left in this stock.
So, bottom line, their new business model is working. It's been validated. They've got a clear runway for profitable growth. For us, here at Talk Tickers, our rating on RF Industries is outperform.
So what's our prediction for the next call? Well, for the Q1 results, we're expecting exactly what management said, lower revenue because of seasonality. But the key will be to still see some year-over-year growth, and importantly, for those strong margins to hold up. As for the stock price, I'd expect it to kind of cool its heels for a bit, consolidate these big gains. And then, if Q2 comes in strong and confirms the story's for real, look for another move higher.
And of course, we always have to say it. This is not financial advice. Please make sure you do your own homework before making any investment decisions.